After you get paid, how do you save and pay taxes as a 1099 freelancer in the video production business? So my goal with these videos is to cover the topics that I discuss with all of my peers and new people that are coming up in the business. These are the discussions we have whenever we ride in the car together or you're sitting around at lunch. All right, quick legal disclaimer. This is just my personal experience. I'm not giving you actual financial advice for your situation. You need to talk to an accountant, possibly a financial advisor. This is just my experience. This is what's worked for me personally. I've made a career in the world of 1 to 5 day shoots, mostly one-off projects. Mix of commercials, broadcast promos, news feature stories, and a lot of corporate video messaging. In each case, I'm typically hired just as an independent contractor. I send an invoice when the work's done and get paid. And that space is very common. It's questionable whether or not that's the legal and proper way to do it in the United States. So I think I understand what the IRS and the state of California, in my case, want me to be doing, which is to either be an employee of the person who's hired me to work, or two businesses billing each other at the corporate entity level. However, the reality is most of the little one-off projects are at the end of the day, or the day you book it, they'll say, hey, send me an invoice. And in that case, you're usually an individual, and they'll collect a W-9 from you with your Social Security or tax number. And then the following January, in the mail, you get a 1099 form that spells out how much was paid to you, and that's also electronically filed to the IRS. Now, all of that income, you as the individual that received it, are responsible to pay taxes on it. I think that's fairly common knowledge, but just in case you weren't clear on that. So herein lies the danger of being a freelancer. You can very quickly fall behind and get in a collections program with the IRS. My first few years as a freelancer, I was also a full-time student, so my overall income number was relatively small. I had a part-time job where I was payroll hourly, and I was also picking up just little freelance crew gigs. I never really got advice from the people that were doing it full-time as to how to manage the cash and pay taxes. Instead, what I would hear are these horror stories from people that have been in the business above me for 10, 15, 20 years and how the IRS was after them and they didn't have the money to pay their taxes and they're on a payment plan from the last 3 years. I thought, that's horrifying. I don't want to get in that situation. I have 3 checks here that came in this week. I've been sitting on these to save them as a prop for this video, and I got to get them in because I got to pay some bills. But, here's how I've been managing all of my freelance income since I was a student. I set up 2 bank accounts for all of that freelance work, a checking and a savings account. And what I do is each time I deposit a check, I immediately transfer a portion to the savings that's enough to cover the estimated taxes. So when I was a student and new, I was doing very little. I was in a low tax bracket. I think it was about 20%. So $100 would come in, immediately move 20 to savings. And then you say, well, the check takes time to clear. I can't move it right away. And I fall in the trap of like, oh, well, I'll wait, and in 3 days I'll move the money over. And then I would spend the money and it wouldn't be in there. So now what I do is I delay the date on the transfer. So it's logged in the register, but it doesn't move until the check has hopefully cleared. So I got conditioned early on when I was just part-time and not fully dependent on my income to just always losing 20%. And then when I switched to full-time, I bumped it up to about 25%. And then what I found is at year end, I'd have a couple $1,000s left over that I could then invest in a retirement account. And once I was in my mid-20s and working pretty consistently and the numbers were climbing, I at some point ratcheted that amount up to 30%. And then I'd have a really phenomenal month with a lot of checks coming in, and I'd just move half, do these big chunks. And that would get me to year end where I have this big surplus of cash left over at tax time. In the past year, I've had a few months where my bills have exceeded the income and I've had to dip into that savings to cover them. However, I've got a big enough savings buffer now that I can recover from a short month like that in a month or two. That simple process, while it was hard to implement in the beginning, is now so routine, and over the past 20 plus years, that's the discipline that's allowed me to save up a down payment to buy a house. I now buy new vehicles with cash. I buy equipment with cash. I pay for family vacations and other unexpected emergencies. They come out of that fund. It's rare that I got to go to a credit card to cover an unexpected expense. So if you're new or not and struggling with the cash flow a little bit, give it a shot. Try it out. The important thing is just to be consistent about it. Don't be intermittent. So let me know what you're thinking. Do you have a similar process? Do you think this would work for you? I'm thinking about doing a few other video topics that extend beyond this, like how I managed to buy a house as a 26-year-old with stated income, how I set up retirement accounts to save and invest to the point where I don't put any cash into those accounts anymore. Let me know your thoughts in the comments below, and thanks for watching.